Lovely good evening and afternoon here to USA and good afternoon here from Germany. It's Markus from Know How Trading, and I'm really honored to be a part of this great event from David and his team. Thank you very much for the invitation, and I'm really looking forward to talk to you and to share a little bit from my knowledge with you. So first of all, I'm a German guy, so I do my best to speak a very good English. So I guess you will understand me. And yes, I'm really glad that we can go through some charts, and I want to share a little bit from my logical way of trading here with the charts. I see already the kind of symbols here. Thank you very much. First of all, I want to introduce myself just a little bit. I'm a trader for 25 years now. I do trading for a living for many, many years now, and I have my own company, Know How Trading, and I work with karmic principles, doing good things to others, make them happy, and everything will come back. So, and I have four mentors, still have four mentors, even after 25 years. And it's my private opinion that you cannot teach yourself trading by yourself. Even you have many free content online, even such great events like we do tonight or this today here. There's always one thing. Trading is a mathematical zero-sum game. It's just the price and the volume, and everything is by math. So, and if you can work with math and with probabilities, then you know in this probability there is your kind of guarantee. That's interesting. And it doesn't matter what you trade. It doesn't matter if you trade Forex or commodities or shares or indices, whatever there is. There's always math, and I want to prove it to you today in my speech tonight. While we go through the charts, I want to give you kind of side information um, to show you why trading is a logical thing and why you have, let me say, a kind of guarantee to become successful with trading. And the only one who is in between you and the trader and the ultimate trading success, it's just the guy who is in front of the charts, because the math and the probabilities would work for us. And if you can handle this the guy in front of the chart, then you have a great chance to make money with trading and to make trading for a living. So, and we want to have a look a little bit on this. So, guys, if you give me your signals, so your symbols, maybe you give me a hint what kind of time frame do you want to see? Because there is a big difference if you want to see the charts in hourly chart or in 4 hourly chart or in daily chart. So maybe you can give me just a quick hint in which time frame you want to see it. So in my company, we have different time frames we trade with. It's the 6 hourly chart, especially for part-time traders. They have a normal job, so they have the possibility to trade in hourly chart and 6 hourly chart, because you have to check the chart 3 times a day, in the morning, in the noon, and in the evening. So everything is fine. It's kind of calm trading. And yeah, a couple of other traders in my company, in my company that trade in daily chart. And one about 25 of my students, we are trading together in intraday trading, 10 minutes in hourly chart and in 2 hourly charts. So because we have two working styles, the first working style is the pure trend following system, and the other one is just also trend following, but with a clear rule, with clear entry, stop loss, and a clear um, risk reward ratio. Exactly that. Okay, so let me go through your charts. And first of all, I'm a trend follower like the turtle traders, and I'm quite sure, especially in USA, you know the turtle traders and the Dow How trading, Dow How traders. We are those we follow the turtle traders. So just pure trend following, really simple and not really that complicated. Okay, let me start with you want to see this in hourly chart. So let me do this in hourly chart here. And this is QQQ. QQQ. This is power shares. So QQQ, this is, what is this? It's a share, I guess. Yeah, power shares. Oh, it's an ETF. Ah, okay, I see it. So if you see this chart, for me, it's kind of simple. It's too late. For me, too late. But it proves you again the system of trend following. So we have clear rules for our entry. We have 4 magic rules. We need a valid trend. We need a young trend. By the way, we are always enter the chart in a second trend arm. Then we await. Yeah, we work with Heikinashi, by the way. And then we wait for the turnaround. You can see it's visible by a balance candle. In my chart, you see the pink. That's the balance candle. And that means, okay, that's the correction is coming to an end. And then we can enter the chart. Yeah. And then we just follow the trend as long as the trend is running. So, and here was a perfect example, like the entry in a second trend arm. As you can see, we have second trend arm, move, correction, second move. And the second correction is our first chance to make an entry. So, which means before the point 2, before the high, we enter the chart, then we have the stop loss below the last point, the last correction point, and then we just follow. When we see a trend continuation, you just follow the trend. So actually, the trend is still running, and we trail the stop loss, and everything is fine. So you always have to make a decision. What do you want? Do you want a big move, or you would just a little bit, a piece of the cake? And that's two different working styles. The one is the pure trend following, just one entry and just follow the trend as long as the trend is running, and the market takes over the responsibility how much money you will get the trend, because you don't know. You don't know what's going on the right edge of the chart. It's just maybe a trend continuation or a correction. We don't know. And this trend will break here below that last correction point. At that price, 472.65. At this price, when the price is going lower, then we have a trend break. And then you know, okay, there was my entry, and that's your money. That's around about 1.76% about the price changing with maybe options, something like that. Whatever you trade there, it's a little bit, of course, more. And actually, yeah, you are in profit here with 4%. And it's kind of simple. And we will see it in the next charts too. So if you ask me what to do right now, to be honest, nothing. So either you are in or you have to look what's going on. So, and for the re-entry, it's a little bit too late because the trend is kind of old, 4 trend arms already. Yeah, it's not longer cheap. And as a trader, you need to understand what is the job of a trader. It doesn't matter what kind of trader you are. Maybe you can have a business like a flower store, or a burger store, or pizza store, whatever there is. And then you know, okay, the only way to make money is to buy cheap the credentials, buying cheap, create whatever you want to create and sell it more expensive. And in trading, it's exactly the same because we have an order book. And everything happens in the order book. Whatever there is and whatever you do, doesn't matter which kind of approach do you have, fundamental analysis or technical analysis, or maybe trading by the stars and the moon, or whatever there is, it doesn't matter. At the end, you order, you send it to the broker, and no one cares about your reason why you want to buy or sell. No one cares. Because the only thing you send to your broker is just the price where you want to get in, the price where you want to get out, in best and worst case, and how many shares, how many contracts, how many lots, whatever there is. You send to the broker just only numbers. And this is what we need to understand. It doesn't matter what kind of reason do you have. No one cares, because look, on the right edge of the chart, there is the order book. And there is just only 3 columns. You see, buying power, price, and selling volume. And that's all. That's all. That's the task. That's the issue. That's the job of the exchange to keep in balance supply and demand. That's done. After that, when we see a new price, trading is done in the original source. When we have a new price, trading is done. No one cares what are you doing afterwards. If you see it in daily chart or in hourly chart, in 4, who cares? No one cares. It's just your perception. It's just your decision. And time frames are also an illusion in trading. Look at the order book. There is no time frame. There's a time. Yeah, that's the slip. Time. At what time, how many contracts were purchased from one to the other side. But there is no time frame. Time frame is made by you, by your software, because you say, oh, I want to see what happens in the order book in 1 hour. And then you can see by line chart, by Renko charts, by bar charts, whatever there is, thousands, unlimitless things you can see what happens in the order book. At the end, you need not a strategy. This is really deep understanding. You don't have to find a strategy because the strategy in trading is given already. Buy cheap and sell expensive. Or vice versa, sell expensive, buy back cheap. But to make it easy, that's the strategy. You don't have to find a strategy in trading. That's the strategy. Buy cheap, sell expensive. Done. So what you need is a mathematical approach with an edge for your entry and your exit. It doesn't matter what you're doing if you use crossing moving averages or divergences or double high, double low, or any patterns, whatever there is, you have to prove it that your approach, whatever you see in the chart, has a mathematical edge. You have to prove it with hundreds of trades. You can make a back test, maybe. You can make a live test. Who cares? At the end, you only make money when you have an approach where you can buy cheap and sell expensive. So that's point number one. And there is a perfect example here in this chart. Sorry. Here in this chart, in this QQQ, you see trend following is working. The only part who is not working, that's the guy in front of the chart. Okay, so which one was the next? AMG swing. With swing, I cannot work. Give me, please, Pat, give me any time frame. What is swing for you? Let's see. Ellie Lilly, I think. I don't know why. Yeah, that's Ellie Lilly. Okay, also hourly chart. Yeah, God's goodness, look, oh my goodness. I love trend following. Now I'm such a believer in trend following. I do this 25 years now, and you can see trend arm number 7. So nothing to prove anymore. It's 7 trend arms. So, and you see it's really working. It's always the same rules. So you have an entry, trend arm number 2, correction is running as deep as possible, entry, and then let it go. Yeah, then let it go. You calculate your money management and then you just follow the trend. Just only follow the trend. Whenever you see a trend continuation, then you trail the stop loss. Trail the stop loss and let it go. The probability is on your side. This is what I teach my students. We have numbers in my education plan. You will find a lot of numbers where it's proven that trend following is working from the math. We have between trend arm number 2 and 7 and 10, 12, it's always a probability more than 50%. In trend arm number 2 and 3, we have 67% of probability that the trend will continue. Trend arm number 6 to 7, we have a probability of 72%. So which means the math is always on your side. The probability is always on your side. The only thing what you have to bring into balance is the trader. And then you have a great chance to become successful. So look at this one. If you have an entry there and just trail the stop loss to the last 0.3, in God's sake, you have 14%. 15%, sorry, 15%. We started in May 3rd, and now we are in June, which just let it run. Yeah, if you do it with a real share, how cool is this? It's just pure trend following. This is what the turtle traders did in the 80s, and why they became such as that's that successful. And you know that if you read the book of the turtle traders, then you know, and they were pyramiding, yeah, and then they make money with this. They had a lot of losses, yeah. They have big drawdown phases also, but at the end, there was always the one and only trend who was running and running and running and running. Yeah. So I give you an example for just an example here for uh, just in 10-minute chart. No, this is hourly chart. Look, Swiss franc, JPY. Look, 13 bloody trend arms. 13. Don't tell me trend following is not working. Yeah, and you can do it also in 10-minute charts. We trade in 10-minute chart. Look, 11 trend arms. 11. Yeah, 11. This is how a trend follower is making money. It's all that I'm a kind of euphoric because I love it. I love trend following. We make a bunch of money with trend following. You just have to trust the system. That's the point. Okay, that was Ellie Lilly. So if you ask me what to do right now, nothing. Nothing. The trend is done and trend is old. So maybe you say, okay, let's go short. Why? Never fight against the trend. Why you should do that? Unless you have a system to go short. But just to think, I think the price cannot go higher. Really? Yeah, I think many people were shorting the indices and the price, and the indices are all-time high to all-time high to all-time high, and almost 95% were shorting, short, 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 and they lose money and lose money, while trend followers take the money. Huh? So this is how you can make money with trading, just in trend following. But the technical part you can teach yourself by YouTube or such videos or such webinars like we do today. But to close the gap between knowing and doing the right edge of the chart, this is not teachable by yourself. Otherwise, we would not send our kids to school, because you can learn about YouTube everything about math and neuroscience and biology or whatever there is. But the deeper logic, the deeper insights, only a teacher can teach you. This is what my teacher taught me over the years. Only a real teacher can enlighten you. You cannot enlighten yourself. It's not possible. It's only a teacher who is way in front of you, way longer, way more experience, and he has the light, and he can enlighten the way in front of you and can tell you, don't do this, just follow me. So this is why we used to say, you cannot teach yourself in trading. The technique, yes, but the rest not. So, let's see. AMGen in daily chart. Let's see. Where is my daily chart? Here we go. There is my daily chart. AMGN. In daily chart. Ooh, there is a great chance. Yeah, that's that thing what I love. Look at this one. That's perfect. Trend on number 2. This is what we're looking for. Young trend, valid trend, young trend, turnaround. Yesterday, yeah, we had a balanced candle, which means buyers came back at this level at around about $295. Buyers came back. So now go along. That's a perfect one. So which means you have your entry, there, roundabout. You calculate your stop loss at the last point there, or whatever kind of stop behavior do you have, and then just let it go. So the probability that we see higher price, that we see a trend continuation, Yeah, about $322 is about 67%. 67%. So, but as you know, 67 is not 100. There is no guarantee. And this is why you have to handle your money management. Yeah, trading. What we need to understand as traders is there's a trinity. We call it or my teacher taught me, and I call it to my students, the holy trinity of trading. So we have God Father, God Son, God Holy Spirit. So what is the holy trinity of trading? Three things, of course: money management, trade management, and the rules. Your approach. Yeah, strategy is given: buy cheap, sell expensive. But the approach, the rules, when you have to get in. Because for your brain, for your physical brain, the prefrontal cortex, who is responsible for conscious decisions, is working with logic, pure logic. So there is always 5 questions at the right edge of the chart: what to do, how, when, where, and why. So can you repeat it? Let's do it together. What to do, how, when, where, and why. So that's 5 logical questions. And when you cannot find 5 logical answers, your brain forces you to act in an emotional way. And this is, by the way, why we have argues, why we have fights with our whatever friends, marriage, or whatever there is. Why? There's always one answer: I don't understand you. So, what are you talking about? I don't understand you. So, and then we get emotionally. It's always the same. So, in trading, the moment you make decisions on an emotional basis, you will lose, because trading is a zero sum game, mathematical zero sum game. There is no emotions. And if your decisions are driven by emotions, you will lose in the long run. So the point is 5 magical questions. Yeah. Yes, of course. Let's do it. What to do, how, when, where, and why. What to do, how, when, where, and why. Simple 5 magic questions. So, and only if you have the Holy Trinity in your bag, then you can answer 5 logical questions with 5 logical answers. So the first one is you need a perfect or a kind of conservative risk management, money management. I call it the money management. What does that mean? I give you an example. This is what we do in in my Tauha family. So let's say we don't want to lose more than 3%, which means we just risk 0.2%. Oh my gosh, I can hear you. Oh, are you crazy? What should I do with 0.2%? I just have 3,000 euro dollars on my account. Yeah, I know, I can hear you. This is why small accounts not working, because your expectations are way too high. This is why all traders with huge accounts are always in advantage, because they can work with 0.2%. So for example, we work in prop trading, for example, with 50,000 K accounts. So 50,000 K account, 0.2% is $100. So this is working. Yeah, $100 is a lot of money, but if you have just $1,000 on your account, what should I do with 0.2%? And this is why we play with this risk button. Why we say, come on, what should I do with 0.2%? That's just $10. What the heck should I do with $10? I want to make money. And then you turn off, then you turn on, then you go 1% and 2% and 3%. Guys, you forget something. And I show you what you forget. Look at this one. I show you what you forget. Most of traders forget that if you lose 30% of your account, you need 43% to go back to zero. And if you have just $1,000 on your account, or maybe $2,000 on your account, 50% are really, really quick down, gone, really. So just 2, 3, 4, 5 losses in a row, just stupid emotional decisions, money is gone. Yeah? And then you have just 50%. Look, if you lose 50% of your account, 50%, which is really, really happen very quickly. If you have just $1,000, $2,000, 50% is really quickly gone. That means you need 100% to go back to zero, to bring your account back to original one, which means you have to double your account. And people used to forget that, get used to forget that. So try to double your account. Of course, it is possible. Of course, I did it also in the past. Yeah, but you cannot repeat it. And the more you turn on your risk, the more you are in risk, because you don't have a guarantee in trading. You just have probabilities. And 1, 2, 3, 4 losses in a row is a normal behavior in trading every day. Also, we have, however, 2, 3, 4, 5 losses in a row. What to do, how, when, where, and why? Exactly. 5 magical questions. So therefore, we tend to say 0.2% by one trade, not 1% of the equity, not 5%, 0.2. And this is the reason why so less people make money with small accounts. You cannot become rich with a small account. It is impossible. It's just lucky punch. But a lucky punch you cannot repeat. It's just a lucky punch. And thanks God, we have now the development in the industry that we can work with these prop trading companies or some asset managements. They give you money and say, okay, if you're a good trader, then take the money and trade. And then you can work with 1,000, with 550K or with 100K or 200K or something like that. So we, in our DAO family, we have the strategy to make the prop trading and to get to $1 million account. And 1 million every month, you have 1%. Guys, we talk about 10,000 euros, $10,000 every month. So this is how trading is working. So now just let's imagine we just take 0.2% and we just want to lose 3%. And this is the trick. You need to lose 3%. You need 15 losing trades in a row a day that you have 3%. And if you don't want to lose more than 6%, you need 30 losing trades in a row. Okay, if you trade in an emotional way, it is possible. But if you have a trading approach like the DAO approach, like trend following, which is a 65 or 67% probability, think about it. It's mathematically impossible, absolutely impossible, statistically and mathematically impossible to crash your account. Absolutely impossible. Because with an approach of 65 or 67%, which is trend following, which we have in trend following, it is absolutely impossible to lose money on the long run, more than 3 or 6%. And just check it again. Look, please, check it again. Oh, where is it? Check it again. You see here, for example, again, now we have between 3 or 6%, you see? And 3 or 6%, you always can come back. But the more you have, 10, 20, 30%, the more you need to come back, which is always, you're always in danger with a small account. That's the problem. So, but if you have a conservative risk management, and for that you need a bigger account, not your small account, why you should risk your own money. Why? If you have the new development of prop trading and people give you money, so why should you do that? Pay some fee and do it. So it is absolutely impossible that you crash your account or that you lose any kind of challenge. It is impossible. So, and if you look, no, like, go back. So if you look at this one, like AMG, yeah, you see, you need now, you risk at the last 0.3 where the trend will break just 0.2%. So nothing happened. Who cares? Who cares? Just take the next chance. Who cares? No one cares if you lose 0.2%. Again, do you understand the system? Now you know why all small accounts are forced to lose on the long run. And this is why people with big accounts make money, because they don't have high expectations. Because if you have a small account, less than 10,000 euro, you have high expectations. You want to make money with your $10,000. Yeah, you think you can double them in 1 or 2, 3 months. No, you cannot. It's a lucky punch, but you cannot repeat it. It's not duplicable. It's not repeatable, lucky punches. So therefore, you need bigger money that you can make money in the long run. And of course, you need the three things, the trinity, the holy trinity of trading. This money management, the trading approach, the trade management, where you go in and out. And I show you a system, one of my systems I trade and we trade, by the way, and how you can make money with this. Okay, this is AMG, great buying chance, by the way, from trend following system. Okay, so CVX. CVX, you want to see it in daily or let's do both. CVX, Chevron. So daily chart. So the uptrend is broken and there is a new downtrend. So actually the last deepest point, the buyers came back, but today, however, there's an entry signal. It's a young downtrend. Trend of number 2, there is your buying signal. So which means selling below the low, calculating your 0.2% risk, maybe anywhere there or latest at the last 0.3, and then just let it go. That's my job. Then just let it go and follow the trend. No one knows how deep the price will go. You will never know how many trend arms the trend will go. But CVX is an interesting trading chance. So let's see it in hourly chart. CVX must be also down. Look at this one. Trend on number 5. You see, there was your great chance. Here, trend on number 2. High correction, really high correction. There was a turnaround. So entry there and just follow. Just follow the trend. 1, 2. So which means there was your entry. And actually, in a trend following system, your stop loss actually is there. Yeah, and this is your money. Or this is just one working style. And now I give you another working style, which is really, really interesting, especially when you can see this this lovely trend. So let's go back. And let's see this one. Just that you understand the math. In this holy trinity, money management, trade management, and your rules. So the rules are clear, right? So we have trend following, we have 4 rules. We need a valid trend. We need a young trend, trend of number 2. We need a correction, and we need the turnaround, balance candle, or patterns, whatever there is. You can see the price and the correction ends and the move starts. So that's the rules given. Strategy: buy cheap, sell expensive. So conservative risk management. And let's say, just imagine we have a profit loss ratio 2:1, which means we risk we have just an approach of 50-50, because in trend following we have 65. But let's just imagine you flip a coin and say 50-50, yeah, go in or go out. So let's just take 50-50, whatever. So we want a profit of 0.4% and we just risk 0.2%, which means, for example, you have a 50K account, you risk $100 and you want to have back 200, and you have just a win rate, your approach, flip the coin 50-50, whatever. So now you make 3 trades per day, maybe in 10-minute charts, or the day is just how long do you need to reach your goals, how to make money. You can make 3 trades a week, a month, who cares? No one cares. There's no influence to the math. It's about the question of time. The more trades you can make, the faster you come to your targets. So, which means, let's say we can make day trading, for example, with shares like CBX, whatever. Yeah, and so we do this in 10 minutes, for example. So 3 trades a day, which means we have 66 trades per month. So we have 50-50, 33 trades, profit, 33 losses. So with the target, or with the profit of 0.4, yeah, we made 13% a month. We lose 6.6%, which means at the end, we make profit per month, per quarter, whatever, 6.7%. So now imagine you have $100,000 on your account. This is how to make money. And that means if you have kind of challenge, like now the modern style with prop trading, and you need 10% to reach the next level or to get real funded money, yeah, 1.5 months, you get it, you have it. So this is one strategy also. But now let's say, ratio 2:1, I don't know, then the trend has to run a really long time. Yeah, okay. Let's make it more conservative. Yeah, let's go down. So the next strategy, let's say we just make a profit loss ratio of 1:1. That means in trend following system, with this Dow approach, with this trend following like the turtle traders did, we have a win ratio. We have a win rate of 65 to 35%. I showed you, and I have thousands of numbers who proves that trend following from the correction to the next trend arm is a probability of 67%. And I do it more conservative, like I said, 65%. And always more easy, more come down, 65%, which means if you get 10 signals, round about 6.5 are a profitable trade, and 3.5 just losers. They don't continue the trend. Yeah. So let's calculate. And let's say, no, we have we don't have the 50-50, we have 65, which means we don't need profit loss 1 and 2 or 2 and 1. We don't need, because we have a higher probability, which means we don't need such a long distance to get the money. So we risk 0.2%, and we want to have 0.2%. So if you have 50K account, you risk $100 and you want to have $100. So that means, let's say we make 5 trades a day in the shares, who cares? Yeah. Or maybe you make 5 trades a week. No one cares. It's just a question of time. Nothing to do with the math, or if you want to become successful. It's just a question of time. You're part-time traders. Yeah, then let's do it in 6-hourly chart. Who cares? So let's say 5 trades. After 110 trades, yeah, you get this result. 65% are profitable, 72 trades. Losers, 38 trades. That means on the profit side, we made 14.4%, and the loser side, we make 7.6%. At the end, we have 6.8 per month, per quarter, per week, who cares? Yeah. And that means if you have to master an assessment or a challenge, yeah, after 1.5 months, you have 10% profit. Ladies and gentlemen, this is working. This is the pure math. And there is your guarantee in the probability. The only part which is not working most of the time is you and me, the guy who is sitting in front of the chart, who is not taking the signal, who is not taking the math, who is dreaming of something stupid illusions. It's not doing its job. This is why you need a teacher, by the way. So you see, we have 3 parts in this slide. We have 3 parts. So the first part is my money management. Look, this is my money management. The holy trinity of trading. Godfather, money management. Don't risk more than 0.2%. And it is impossible to crash any kind of account. If you play with this button, believe me, you crash your account. You will not make money. So then we have the trade management and the rules. This is our win rate of 65%. So that's the rules. Number 3 is the trade management, because we have a clear stop loss and we have a clear target, which means we use this trend following methodic and just use the move from trend on number 2 to 3 and maybe 4. Just we want to have 0.2% risk and target. We have a clear target, risk reward ratio 1 and 1. It's enough because we have a high probability in trend following of 65%. So in this here is just the question of time. It doesn't matter if you trade in hourly chart or in 2-hourly chart or in 4. Who cares? Even in daily chart. Then it's just a question of time. How long do you need to reach your 10%? This is how huge and profitable traders are working. So, and if we do it, let's see, how is this working? So I show you just what we did today. Let me see. Now we did it in 10-minute charts today. Yeah, look. For example, that was Australian dollar, US dollar today. So you see, here was trend on number 2, the green one. So there was the entry, stop loss, price movement, price changing, 0.55. So ratio 1 and 1, same risk, same target, 0.55. Look, we reached the target exactly. So $100 risk, we made $100. It's really that simple. And the math is on your side. The math is working. And with this trend following system, there's a really high probability. If you don't make money with this combination of the holy trinity, yeah, with money management, trade management, and the Know-how approach, then maybe you should look for another hobby. Then maybe go bowling or hiking or whatever, or whatever you do, but then stop trading. Yeah, because this is really, really working. So let's find another one. Here, that's the current trade which actually is running. This is British pound, US dollar, for example. So it's trend on number 2 again. Yeah. And by the way, in the short, we made money today. I was this morning. Today is 18. Yeah, today is 18. So look, that was this morning. Early morning, 6:30 in the morning. We had trend on number 2. There was the entry. Stop loss above the last correction point, because at the last point 3, the last correction point, the trend breaks, and then the idea is no longer valid. So there is the stop loss. There we calculate the 0.2%, the $100, and 1 in 1 ratio, and the same on the lower side. And then we have the probability of 65% that we see a trend continuation. Look what happens. We reach target. We started 6:40 and you reach the target 10 a.m. this morning. Well, 2, 3, 4 hours, 4 hours later. It's not the holy grail. We have losses also because 65%, not 100%. So we have losses also. And this is a current trade right now. This is a running trade. So we have an entry there. Yeah. And this is my stop loss. Here, the last 0.3, and this is my target. So if the price is going up there, I reach the target. The probability is 65%, no more, no less. Yeah, and this is, I can show you like CVX, for example. Look, it's in 10 minutes, for example. Look, in the past, it's not all the time working. Yeah, but if you see the trends, always trend on number 2. So here are on the way up. So for example, look, I give you this example. Let's make it a little bit bigger. You can see it. So for example, trend on number 2. So there was an early and late and deep entry here. Yeah, maybe let's say you get in here. Who cares? Yeah. So calculate your money, your risk below the last 0.3 when the trend will break. Let's say 134. And the same 1-1 ratio on the upper side, 134. In God's sake, look, there is your target. There is your target. Just a little bit later, there is your target. Yeah. So this is working. Yeah. But it's not working all the time. I show you. Let's say, let's go short here. Okay. That's the first trend arm. That's trend arm number 2. So let's say it's a little bit bad risk reward ratio, but we have to do it. It's just probability. So entry there, stop loss, last 0.3. And you see, in that case, actually, we need 3, let's see, we need 3, come on, 386, 386, round about there. So there is the target. So it didn't happen. You see, in the meantime, the trend breaks, and this is a trade management. So what we do now, if we don't reach the target and we see a trend continuation, we look, where is the trend break? When the trend will break. So there is what the trend break here. And then we just trail the stop loss here. And then, of course, we don't lose $100. We just lose $20. So this is a really smart trade management. And this is the holy trinity of trading. And this answers all your questions. What to do, how, when, where, and why. And this is the path of logic, which will lead you out of the circle of suffering. Because all of us, we know that 90% of all traders fail. Why? Yeah, because they cannot close the gap between knowing and doing. And this is the big problem, guys. Because look, if you see the slides I showed you tonight, this afternoon in USA, then you know the math is on your side. If you have a smart money management, the math is on your side. If you have an approach, not a strategy, strategy is given by cheap, sell expensive. If you have your approach, whatever there is, maybe trend following, then you have 65% probability on your side. You cannot lose. So the rules are clear. And the rules, 4 magic rules, by the way, this is really interesting. I teach my students neuroscience because I had an education in neuroscience. And if you don't understand neuroscience, you cannot become a successful trader on the long run. Short run, everybody can do this. On the long run, then you know my prefrontal cortex, which is beyond my forehead, can handle 4 thoughts at the same time. 4 thoughts. But you have 5 body senses. 5. Which means 65 mental imprints run over your prefrontal cortex in every second. So, and now you look at the chart, you listen to news, you do this and you do this. You understand why you're always overwhelmed in trading? Why you act in an emotional way? You need to be focused. And if you cannot answer in this overwhelming state of mind, you cannot answer the 5 magical questions: what to do, how, when, where, and why. You must act in an emotional way, and then you must lose on a long. That's a neuroscience thing. It has nothing to do with the market. It has nothing to do with any kind of approach. It has nothing to do with money management. It's here in between the ears. And this is why you cannot teach yourself in trading. Learning to draw the trend, who cares? Money management, I showed you. It's a simple thing. It's a simple math. But you know, the probability means you will never know in which order the plus and minus trades will occur. You don't know. So actually, this is CVX, for example. Oh, you want to see it in hourly chart, right? Where is the hourly chart? Here, that was the hourly chart. So, and here you can see a perfect example how to make money with this math I showed you. Look, there was the entry. There was the entry. It was trend on number 2 here. We had the correction. There was the final turning point, which means, well, maybe let's make it worse. Yeah. And let's say, now we had an entry there, maybe a little bit late. Yeah. So who cares? So you calculate your 0.2% above the last 0.3. Why? Because there the trend will break. And we are trend followers. And the trend is broken. The idea is dead. So therefore, you have the money management, 0.2%. So let's say that's the price changing 3.45, 54%. So we want to have 1 and 1 risk reward ratio. So let's say 3.54. Where is it? Here is it. 54. Here we go. Look. Here we go. There is your target. One trend arm later. Guys, this is how it works. It doesn't matter in hourly chart, 10-minute chart, even in 5 minutes, just more stressful. Yeah. Or in daily chart. Yeah, that takes a long time. But if you have a huge portfolio of many shares, let's find it. Let's find trend on number 2, make the math, and the market will give you the rest. Not with every single trade. This is not possible. We have probabilities, no guarantees. But if you understand this system, if you understand this holy trinity of trading, then you have in this probability, you have your kind of guarantee. This is how it's working. So let's take a last example. I just have 2-3 minutes. Let's take a last example, let you understand how it's working. And there was the question of PayPal. I guess this is PPL, right? No? Yeah, where is, let me see. Here we go. Guess this is right one. Yeah, here we go. Oh my goodness. Yeah. Lovely, lovely. So many times, it worked many times. So for example, here, it did not work. In this uptrend, it did not work because there was no trend continuation. Yeah, you see that it's not working. Probabilities. Yeah, you have losses. This is why you need the money management, because you don't risk more than $100. Yeah, doesn't matter. The stop loss at last 0.3, $100. Who cares? But on the short side, look, on the short side, there was it's working. So there was my entry. Trend on number 2, entry at the 0.3, calculating $100, 0.2% at the last 0.3. And you want to have the same on the profit side. Look, 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 look. 6. There is it. There is it. Bam. Guys, trading is not that complicated. It's not a rocket science. Trading is just math. Trading is probability. Trading is the holy trinity of trading. And if you understand the logic behind, then I promise you, you will make money. This is what I teach my students every single day, from Monday to Friday, and even on a weekend when they call me, oh, what should I do? I say, trust the system, trust the system, and believe it. This is a Heikinashi chart, yeah. I love with Heikinashi because it's more smooth. Yeah, and I am a trend follower, and I can find the tops to draw the trend more perfectly because the tops, the highs and the lows are the same with normal candles. So you don't need normal candles, just use Heikinashi and you will find the turning points to draw the trend in a logical way. It's easier to find it with Heikinashi than with normal candles. So you see, it's working. It's working. And if you do it, yeah, I invite you to come to the Dao family. We speak English there because everything I do in my community, I do it in German and in English. And actually, I'm learning a third language. This is Thai language because I have an office in Bangkok also because I work in Southeast Asia also. So, and everything, every webinar, every day trading, yeah, everything what we do is in German and in English. So you can come to the How family, and I am pleased and I am honored to teach you and to support you and encourage you to become a successful trader in a maybe reasonable time. Thank you very much for listening. Thanks to David Lanker to be a part of this great event. I wish you a lovely evening, a rest of the day, and I hope you will be successful. And maybe you follow the link. David did it in the past, Dowhow-trading.com. There you will find all offers. You can send me an email. You can send me a WhatsApp message, whatever there is. Let's do it together. Have a great day. Thank you very much. And as always, have courage and be kind. And may the force of the logic be with you. See you next time. Back to David.